A very quick background to the next conversation. It was during the Jonathan's administration that Nigeria floated the Sovereign Wealth Fund. The idea was to squirrel a few dollars or some dollars away to prepare for what you called economic rainy day. We started that Sovereign Wealth Fund with something around $1 billion, 1.5, just about $2 billion. And then we moved on to the current administration that's been making some incremental funding into that fund. But part of the investment strategy was to invest some part of this fund overseas in foreign assets. But the Buhari's administration has since rejigged the NSIA focus and says charity should begin at home. The idea by President Buhari's administration to get the NSIA to invest more locally in infrastructure, agriculture, and other areas was also supported by a statement by the AFDB Group President, Dr. Akinwumi Adesina, who says African countries should invest more of their sovereign wealth funds at home because the country lacks basic infrastructure and industrialization. So this come together at a time, now that we have the ranking, according to the IMF, saying Nigeria's sovereign wealth fund was the second worst performing in the world. Nigeria has since said no. So let's bring in Uche Oji, who is the man in charge of Nigeria's sovereign wealth fund. He's the head of the Nigeria Sovereign Investment Authority, live to us from our Abuja studios. Good morning, Mr. Oji. It's good to have you on the program.
Thank you for having me. Good morning.
Yeah, that very brief background as to where we started from and perhaps a bit of where we are today. What's your first word here in reacting to the latest ranking by the IMF of Nigeria's Sovereign Wealth Fund?
Well, my first statement is I think we need to correct your statement. The IMF ranking was in the Nigeria's use of the Sovereign Wealth Fund. It's not about performance, okay? So they're basically saying the Nigeria and other countries that use their Sovereign Wealth Fund, you know, in a manner, obviously, in terms of domestic infrastructure and all of that stuff, they put a ranking, which, frankly, is not even the IMF's own data. It's third-party data they quoted from everywhere else. So there are just so many factual problems and deductive problems with the report. I don't know if you've read it. So I think the basic premise of the report is to say that Nigeria's use of the Sovereign Wealth Fund, and then they put everything together from the excess crude accounts to all sorts of things that relate to the use of natural resources proceeds into this ranking. There was no mention in that report of the Nigeria Sovereign Investment Authority. So there is not really any attack or any reference to the performance. It just speaks about the larger picture of how countries such as Nigeria use their sovereign wealth fund. So if you look at that report and the ranking itself, again, back to the fact that it was third-party agencies, and I find it a little bit, like I said, flippant that the IMF will use two different third-party reports, couple it together and create a ranking. They should do their own work. And I think if you're going to provide a ranking, do your own work, and they didn't, okay? So that I think is something fundamental wrong with the report. But the data itself looks at countries that do not invest in their domestic economy are ranked highly. So you'll see that. So the likes of Chile, Norway, who do not invest in domestic economy at all, do not invest in domestic infrastructure, are highly ranked. To the bottom are countries that invest domestically, like the Nigeria Sovereign Investment Authority, like the UAE, like Qatar, who they ranked the last, frankly. These are funds that have a balanced mandate of investing both domestically and internationally. I think it makes sense. You know, there's been a fundamental aversion by the IMF from the very beginning about the use of your resources to invest in your own country. I think that is wrong. There's so many other bodies of work out of Stanford University, Oxford University, that speak to the fact that sovereign countries like African countries should use their own resources to invest in commercially viable infrastructure at home. I think it makes sense. So I think that the IMF obviously is concerned about stabilization. And therefore, their view of what a sovereign wealth fund should do is put your money in a foreign savings account or a foreign reserve account and use to stabilize your economy. Do not dabble into domestic infrastructure investment. I fundamentally disagree. Now, to performance, the NSIA has had 6 consistent years of profits. We're about to report as annual report will be published by Monday, latest. That also shows we've been consistently profitable across all 3 funds. In some funds, we're top quartile. In most other funds, we're second quartile in terms of performance. That's the data. The third point I want to make is that the Sovereign Wealth Fund Institute and the International Forum of Sovereign Wealth Funds are actually umbrella bodies that look at sovereign wealth funds in terms of their performance, in terms of their governance and transparency. They have clear metrics of transparency and governance for how sovereign wealth funds should perform. For 4 out of 5 years in a row, the Nigeria Sovereign Investment Authority has ranked in the second quartile of performance in terms of transparency and governance. So there are just so many things wrong with the report of the IMF, but the most fundamental thing is actually they use other people's data, didn't do their work, hardly ever engaged in detail to really understand how these places work, and have a fundamental aversion to the philosophy of using your own money to invest in your domestic infrastructure. That, I think, is where the issue really lies.
Okay. Well said, Mr. Orji. Again, looking at the, a bit like an executive summary of the, of the report by the IMF, I beg your pardon, says the index for the ranking was compiled using the corporate governance and transparency scores of the sovereign wealth funds and the size of assets as a percentage of their 2016 GDP of the countries considered. You think in terms of corporate governance, transparency, strong institutional framework in managing our portfolio or our own sovereign wealth fund, you think we did well, more than the ranking that we got?
No, absolutely. Again, this is actually, in my opinion, not a detailed ranking of the NSIA or even other sovereign wealth funds, frankly. It's a very bizarre piece of work, frankly, to just say the least. Look, let me tell you 3 things. The clear metrics of governance and transparency by the Sovereign Wealth Fund Institute are very clear. One of the first things they talk about is the origins and the uses of the fund must be explicitly provided. We do. Independent audit of the account must be provided. We do. I don't think there are many that actually provide quarterly audited accounts that we provide, audited by the external firm of PricewaterhouseCoopers. We provide annual reports within the first 3 months of the end of the year, 4 months in some cases of the end of the year. We have consistently provided these audited accounts, and they're externally verified by PricewaterhouseCoopers. So those are things, in my opinion, that stand to speak to the transparency. Secondly is governance. We have a board of 6 independent professional board members who, through 5 committees, get involved in looking at the work of the NSIA and providing adequate governance. Number 3, the investment policy statement of each of these funds, and these are 3 ring-fence funds, the Stabilization Fund, the Future Generations Fund, and the Nigeria Infrastructure Fund, are published on our website, and we stay within those mandates. I think there's a fundamental view here as to whether we should have a Nigeria Infrastructure Fund between us and the IMF. We do think we should, and there are other bodies of work that support the fact that we should invest in commercially viable infrastructure. The Nigeria Infrastructure Fund has been consistently profitable over the last 5 years. Our investments are in motorways, are in healthcare, they're in power, they are in agriculture, and more recently in gas diversification. These are the areas that we are continuing to consistently invest. Look, the opportunities here in our country to invest are plentiful, and we believe that this fund should not only invest directly, but should be a platform to attract other investors to come into the country. That is the focus of the NSI, and that's what we're working towards. And so we can have all this fundamental belief as to whether we should focus on stabilization or focus on infrastructure. We have decided to do both because that's what the NSIA law says. The Stabilization Fund, Future Generations Fund invest globally. Those serve as a hedge. But the Nigeria Infrastructure Fund looks at opportunities within the country, which I believe anyone that has looked at the work of the NSI can attest to the fact that it has actually added value. More importantly of late have been in roads, in healthcare, and in agriculture.
Mr. Aji, the president of the Nigerian government was sometime last year was speaking to the need for the NSIA to tweak its investment portfolio assets to do more locally. That's the current thinking of the current administration. So specifically speaking,
that's correct.
How do we? What's the portfolio looking like in terms of the in terms of the assets? And again, what's the balancing here that we have? And how do you think this is already benefiting Nigeria or Nigerians, or we will wait a bit to see the result of this domestic investment?
I think you've already seen many of them. So the president's statement is also in tandem with the evolution of the NSIA. So in the first 2-3 years of the NSIA, our focus was on deploying capital on the Future Generations Fund that invests in private equity, public equity, hedge funds, other alternatives, and he's made those investments. We're 81% deployed in terms of our capital. Our investment advisors were Cambridge Associates up until late last year, and we've switched to UBS as our investment advisors. Globally diversified, we're invested in many countries. I think at the last count, we have investments across 17 different countries out of those funds. They have been consistently profitable, like I said, particularly our private equity portfolio, which has actually delivered some really solid returns. We're very proud and very happy with that. The stabilization fund, and by the way, the future fund holds about 40% of our assets. The stabilization fund holds 20% of our assets. Again, it's mostly in corporate, in investment-grade bonds and treasuries. So again, consistently profitable, and we're very happy with that. The remaining 40%, and that stabilization fund is 100% deployed. The remaining 40% is in Nigeria Infrastructure Fund. That fund, at the moment, we've deployed just under 20%, and we're going to aggressively deploy over time in specific areas. So the statements by the president is consistent with what we believe is the evolution of the NSIA. Show some stability and some returns and generate some cash from the investments you've made in the external markets, and then evolve over time as the team becomes more seasoned into infrastructure. Now, the second part of your question is, are we seeing any benefits? Absolutely, the answer is correct. In addition to managing NSIA's own funds, we're also managing certain initiatives of the presidency. One of them is the fertilizer initiative, which I believe, of course, some people have issues with. But the reality about that is this has delivered significant value. Okay, we have revived through this investment 18 blending plants. Up until now, we import everything. And before this investment started 2 years ago, none of the blending plants actually operated. Today, 18 of them are operating, employing tens of thousands of people, with fertilizer delivered at 40% below price and consistently profitable. Actually, even the subsidy of the government has collapsed from 60 billion naira a year, 50, 60 billion naira a year, to less than 7 billion naira a year from this effort of the NSIA. The second area of investment is in roads. We have been involved in developing the second Niger Bridge, the Abuja-Kano Highway, and the Lagos-Ibadan Expressway. These will be toll roads. Construction is currently ongoing, and we expect that these roads will be finished, some of them end of 2021, the other ones mostly in 2022. They will be commissioned, operational, and be tolled. We are also involved at the moment in agriculture. And we have set up a joint fund with a company called UFF, which was backed by Old Mutual of South Africa, that's actually now making some aggressive investments in agriculture. Healthcare. Healthcare is an area where we're very, very proud of some of the recent advances made in healthcare. We've commissioned the Cancer Treatment Center at Luth, which is a joint PPP with Luth, currently 100% owned by the NSIA, but it's on Luth premises. We're going to do some similar type investments in Kana no Moahe for commissioning in the next month. We have a pipeline of 14 healthcare investments we're going to be making. These are areas of need for the country, and we're addressing them head on. There is no point putting your money in a foreign reserve account when you have clear needs at home. And if you have a professional management team that can turn those things into consistent, profitable investments that strike a balance between social returns and commercial returns, bingo, you've got it right. That's what we do at the NSIA. Now, again, we can have a philosophical debate with the IMF, but the truth about it is this: every country needs to develop its own ideology that serves its own purposes. If Malaysia listened to the IMF in 1998, it probably would never have recovered from the financial crisis. The reality is we know our problems and we need to solve them directly. Now, to the management of the NSIA, let me speak to a few things. Again, I've spoken about the board, highly professional. These are independent board members, many of them highly accomplished. Our chairman used to be one of the youngest partners at Goldman Sachs. We have many other board members who are individually very accomplished. But more importantly, the infrastructure fund of the NSIA is run by a senior member of staff of the World Bank, who came here on secondment for the last 4 years to help us work on making sure that the investments are made properly, but also we comply with all the governance standards. Foreign Corrupt Practices Act, UK Anti-Bribery Act, all the acts within the Nigerian government, we aspire to the highest standards of these acts. Now, finally, again, people who actually interact daily with the sovereign wealth funds, the International Forum of Sovereign Wealth Funds, the Sovereign Wealth Fund Institute, have ranked very highly what we do. So again, with due respect, when I looked at the work at the IMF, but in reality, I think it's actually a very flippant piece of work, hasn't really addressed some of the key issues, and just seems like something cobbled together with no real correlative value or no real deduction that makes any sense.
Mr. Oji, this report by the IMF also speaks to the size of the assets as a percentage of the GDP. Take us back a little bit to the beginning of the Sovereign Wealth Fund when it was created, and how much accretion or input has come from at least 2 administrations, and where the balance sheet is at the moment.
Sure. So total balance sheet is as follows, right? There is the core funds of the NSIA, there are returns NSIA has made, and there are funds we're managing on behalf of the government and other agencies of government. So these are the three parts of the fund. Contributions. This fund started with the previous administration putting $1 billion into it. The current administration has, in the face of the recession, put $500 million into the fund as contributions. So core equity was $1.5 billion. Aggregate returns earned so far is about $200 million. Third-party assets, which we manage on behalf of other agencies of government, like DMO and the Presidential Initiative on Presidential Infrastructure Development Fund, total about $750 million. So put all of this together, the NSIA's assets under management is about $2.53 billion at the moment. Now, the IMF obviously graphed assets as a ratio of GDP. I'll speak to that in two parts. The first part is, yes, we accept we're small. We've only started 5 years ago. We've had oil price collapses. We've had issues with accretion. We do accept all that. So we're relatively small to our GDP. But we've only just started. The most important thing is that there's an acceptance to consistently contribute now going forward, and we hope that that is maintained. Some of the funds you're comparing the NSIA against have been in existence for more than 40 years. Qatar started in 1956 or 53, something like that. UAE in 1976. So the reality about this is it's not so much the size of the fund today, it's can we consistently contribute to this fund, because this is for future generations. The real value of this fund should be measured in decades, not in months. So I see that data of AUM, assets under management, to GDP. Granted, we're small, but if we can accept to consistently contribute to this fund and grow it over time, we then might actually be as impactful and aggressive and as sizable as some of the other funds that are much bigger. Now, in terms of what the IMF did with their report, I really don't see any correlative value to graph assets under management to GDP versus transparency and governance. They actually are completely mutually exclusive pieces of data. And this is one of the things that's represented in that report that I find quite laughable, to be honest. So the point here is that transparency governance is one thing. We have been consistently in the last 5 years top quartile. Asset size is a different thing. We're small. But the government has accepted to continue to contribute. All the engagements we've had with the government, and we're very pleased, actually, with the support we've received with the current administration, across all tiers of the current administration, sub-nationals, National Assembly, and the presidency. There is a need to contribute in this fund. And I think people are beginning to see the value of it in the investments we have made in agriculture, in healthcare, in toll roads now, and some of the things which I'll be doing very soon in gas diversification. We're very proud of where the fund is, and we believe that the future, quite frankly, is bright. We just need to be consistent in contributions.
NSIA's name also featured in some media reports today about the Nigeria special economic zones, which has been created, and NSIA has been reported that would likely be part of that arrangement to ramp up on Nigeria's manufacturing as a percentage of the GDP to about 20% moving forward. Is this true? Is the NSIA thinking, or has been approached by the Ministry of Industry, Trade and Investment to be a counterpart financier of the special economic zones, getting Nigeria's industrial capacity or industrialization capacity moved up?
Absolutely. We've engaged with the Ministry of Trade and Investment. We haven't made an investment yet. Our board hasn't sanctioned an investment yet, so we're still in discussions to see how the structure works for the NSIA and how much the NSIA will invest in. We believe in industrialization. Now, let me give you an example. One of the offshoots of the investments we made in fertilizer was our partnership with OCP. It became pretty clear very quickly in our discussions that the balance of trade between Morocco and Nigeria was skewed. There were things Nigeria could produce that Morocco needed to produce their own fertilizer, such as ammonia. Ammonia is made from natural gas. We're flaring a ton of natural gas in this country without really trying to create value out of it. So we've gone on to sign an agreement with Morocco to jointly create an ammonia production plant here for offtake by Morocco, which they would now use to coat their phosphates and then re-import into places like Nigeria and other parts of the world. I think industrialization is the future of this country. There's no question about it. And I'm glad that one of the offshoots of the Presidential Fertilizer Initiative is the creation of this ammonia basic chemicals plant that we're developing with OCP. Hopefully we'll break ground next year, but we're looking to have this thing up and running fairly quickly, because I think Morocco needs it. Nigeria needs, obviously, to industrialize. And so for us, industrialization is a very important aspect. So I talk about gas industrialization as one of the areas of interest for the NSI. This is one of the key projects there. Now, if I look at industrial zones, many countries have used this as a way to develop. it was very key to China's development. I remember in the early days when I was an analyst working for Goldman Sachs in the late 90s and early 2000s, visiting Shenzhen and seeing Shenzhen, turn into this manufacturing hub. Back then, it really wasn't very impressive. Today, it's a massively impressive city. They have thousands of these industrial zones across both Taiwan and China. There's nothing wrong in doing that in Nigeria.
Mr. RJ, this has been a very wonderful conversation. Thanks for clearing this up. This is your first exclusive interview so far this year, and of course, clearing up on this very IMF report. Thank you very much. Do have a great day. We look forward to next week for your briefing and release of NSIA 2018 full year financial statements. Uche Oji, the CEO at Nigeria Sovereign Investment Authority. Thank you very much, everyone. Let's come back to you after the break.